Hi, I'm Kalilah Reynolds, and guess what? It's Taking Stock's 1-year anniversary. Can you believe it? It feels like it was just the other day that we started this journey together, and look at us now. As you know, we're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to takingstock-ja.com to subscribe to our newsletter. The full website is now up. You can also visit KalilahReynolds.com by clicking the link up here or in the description box below. It's the hub for all things Kalilah Reynolds: merch, bookings, money news, and of course, all our videos. Now, how about some highlights from the past year? Here's a look back. Hi, and welcome to Taking Stock. I'm Kalilah Reynolds. Hi, I'm Kalilah Reynolds, and welcome to another episode of Taking Stock. Hi, I'm Kalilah Reynolds, and welcome to Taking Stock. Hi, Chris.
Hi, how you doing, Kalilah?
I'm good. I have a latte for you in the back.
that's low.
Eye on anything specific?
I can't tell it. I have to shoot you.
And we wouldn't want that, would we?
No. Oh gosh, no.
No, I don't have. No. Hold on. Let's get something clear. I do not have a problem with Airbnb.
Okay.
No, but there are some legitimate concerns.
Like
the safety we've discussed.
Yes.
What about the concern that you all are crowding out young professionals from getting affordable
I don't think
apartment
that's a problem.
rentals?
Young professionals need to pay their dues.
Oh,
Yes. Can I explain? You need somewhere to live. You go where you could afford. Not everyone could live up a St. Andrew. There's new projects in Portmore, Olawa. They live where they can.
so we must live in Portmore and commute.
Nothing wrong with Portmore.
I hear you all both coming here to apologize for customers. You say you're working on it, but some people say it's too late to apologize. You know, there are people who just are fed up with the service from both Flow and Digicel.
Yeah, we get it. We get it. And, you know, let me use this opportunity to even declare a season of peace in the telecoms industry where we attack this problem head on.
Does the piece come with free credit?
I don't know about that one.
Welcome back to Taking Stock. As you know, we record here at iCreate Studios on Hope Road. iCreate is a company that listed on the junior market of the Jamaica Stock Exchange a little less than a year ago, February of 2019. Since then, the stock has performed less than stellar. It's been disappointing for shareholders, and the company is in the red. So we have the man with the vision. He thinks he can take it places. Tyrone Wilson, President and CEO of iCreate. Hi, Tyrone.
Hey, what an intro.
People giving you flack, though.
Me?
Yeah.
I don't know. That's what you're saying.
That's news to you?
Pretty much.
I'm trying to wrap my mind around how it works for, say, a soca event, where there's a lot of body-to-body contact at an event like this.
Right.
People, you wind up on each other. How do you wind socially distant? I saw a meme with a young man whining on a young woman through a glass. I know it's supposed to be funny, but how do you actually do it? So tell me about the ideas that you guys have come up with.
It's interesting you bring up that point. I was talking to one of my friends that's on a planning committee for one of our neighboring island, Carnival, and one of the ideas that they're floating around is bumper to bumper, not bumper to fender. So you know,
you have to explain that one to me. Bumper to bumper, not bumper to fender.
So you're whining, not bumper to fender. So you're whining your back to your back, you know.
So a rights issue would be coming up early next year. Can you say at this time, what's the mix between debt and equity that you're going to be looking at?
Good question. The mix is going to be probably about 15 million in debt of the 35 and 20 million in rights issue at the right time.
All right, you heard it here first, listeners. Now come on, let's get this money. Well, we've certainly made some memories in the past year. Did you see your favorite moment? If not, what did we miss? Comment below. Now here's what's coming up in this episode.
First up, Wigton Windfarm held its first AGM since listing on the Jamaica Stock Exchange last year. Net profits at the company are up 34% compared to the last year. Why has energy done so well, and what are their plans for growth? We'll hear from Wigton's Managing Director, Earl Barrett. And later, the analysts weighing on the latest market developments. The economy has shed more than 135,000 jobs compared to the same period last year, with unemployment now at 12.6%. And Seprod's profit doubled amid the COVID-19 pandemic. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Barita Investments and Digicel are perceived by marketers as the top brands for 2020 based on the findings of a survey conducted by LEEP Marketing. The Brand Perception Survey, published yesterday, October 26, shows that 30 of Jamaica's leading marketers were surveyed, with some 40% or 12 persons choosing Barita as the most impressive brand. 40% of the respondents also had Digicel as an impressive brand. However, more respondents listed Barita as the most impressive of their three picks. Respondents described the Barita brand as being savvy, witty, relevant, and visible, whereas Digicel's top marks were based on its philanthropic and entertainment efforts during the pandemic. Rounding out the top 5 brands in the survey were Jerry and Nephew Campari Group, Grace Kennedy, and small business delivery brand 7 Crave. The economy lost over 130,000 jobs as of July, largely due to the COVID-19 pandemic, lifting the unemployment rate to 12.6%, according to data from the July Labour Force Survey conducted by the Statistical Institute of Jamaica, Statin. July's unemployment figure represents a 4.8 percentage point increase when compared to the rate of 7.8% recorded for the same period last year. Finance Minister Dr. Nigel Clark says it reverses 4 years of work to add some 100,000 jobs to the economy between 2016 and 2020. The Bank of Jamaica BOJ intervened in the foreign exchange market for the third time this month on Friday, selling $20 million to authorized dealers and cambios through its foreign exchange intervention tool BFixit. As with the other two interventions, the BOJ restricted the buyers from reselling the funds for more than 20 cents Jamaican higher than the purchase price. Additionally, buyers could only resell the US dollars to end users who needed to pay for essential goods and services. The total amount sold by the central bank this month alone stands at $60 million. The interventions are aimed at slowing down the pace of the depreciation of the Jamaican dollar against its US counterpart. It opened trading on Monday, October 26 at $146.74 to $1. Managing Director of Wigton Windfarm, Earl Barrett, says the company is likely to return to the equities market in the coming months to raise capital for its expansion plans, both locally and in the region. Barrett made the disclosure at their annual general meeting last week, sharing that both a rights issue or additional public offer are being considered to source the necessary funds. Wigton's net profit for its June 2020 first quarter came in at $300 million from total revenues of $751 million. That compares with $366 million in profit a year earlier on revenue of $833 million in 2019. Gara Restaurants has opened another Wendy's fast food outlet, even amidst the slowdown of economic activities caused by the COVID-19. The new outlet at the Super Valley Town Centre on Constant Spring Road in St. Andrew was commissioned at a cost of over $100 million. It's providing 30 new jobs. The new restaurant is the second outlet put into operation within the last 6 months, the other being at Waterloo Square. Jamaica Money Market Brokers Group has signaled its intention to capitalize on more IT-based solutions to grow the business. CEO Keith Duncan disclosed plans to improve the company's digital solutions and successfully implement Phase 2 of the bank's standardization project at the company's recent AGM. The group's system improvements will, among other things, see the establishment of a core platform across the company's 3 operating territories, Jamaica, Dominican Republic, and Trinidad and Tobago. It will also lead to the rollout of card management systems, intelligent ATMs, a mobile application, and upgrades to the company's online banking and investment services. The number of people using checks to do business has fallen by 1/3 since the onset of the pandemic. The data found in the Bank of Jamaica's payment bulletin disclosed that just over $100 billion worth of checks were processed in the central bank's system in July, down from $160 billion in July 2019. But while check usage wanes, there has been some recovery in other retail activities. Retail point-of-sale activity, for example, has surpassed year-earlier levels, signaling that retail consumers are spending again, just not with checks.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. And when we come back, Wigton's profits are looking up. We'll discuss with Managing Director Earl Barrett. This segment of Taking Stock is brought to you by Bulwark Insurance Agent, insurance made easy, and Massey United Insurance. How good is your insurance? Welcome back to Taking Stock. One of Jamaica's most traded companies, Wigton Windfarm, held its annual general meeting last week. And while profits are up 34%, shareholders want to know more about the company's expansion plans. Joining me now is Wigton's Managing Director, Earl Barrett.
Welcome, Mr. Barrett. Thanks for joining me.
Thank you for having me this morning.
And congratulations on 1 year, more than a year now, being listed on the Jamaica Stock Exchange. I watched your virtual AGM on the internet last week, and a lot of shareholders were interested in Wigton's expansion plans. So talk to me about that a bit.
Well, like the shareholders, we are also excited and filled with anticipation about expansion. As you would well recognize, you're in the business world, that companies that are not able to grow will eventually die. Certainly for companies like our own that dealing with electromechanical equipment that has finite lifetime, you have to constantly be looking at either planned obsolescence or just basically looking at growing the size of the business. And Wigton's board of directors and are constantly of the view that growth is on our minds, on our lips, and in every action we take. What has been a bit of a distress for us, if I may phrase it that way, is that quite a number of the plans that we had put in place or were developing to move forward had to be put on hold, not by our doing, but by the pandemic. So, as we pointed out in our annual general report and at the AGM this last Wednesday, growth is a must. Timing of that growth is what is occupying our minds now, because as you recognize in this era of the pandemic, any plan that you make today could be thrown under the bus tomorrow. And we have seen so many of that happen.
Yes, absolutely. So what were some of these plans that you had that were derailed by the pandemic?
The plan, as I say, was to expand the business. And we were going to expand the business, not necessarily just in putting up more wind turbines. As you would recognize, Kalilah, being listed on the stock exchange, we can't come to the public and talk of any detail of these plans before we have so informed the stock exchange. As a traded company, one slip of a word in a sentence to you could send a message to the market that could either have a Russian buying the shares or a Russian dumping the shares. That's not the way we want to do our business. And certainly I don't want to be pulled before the courts for speaking out of turn in terms of giving details of it. To give you the details right now would be untimely.
Well, I certainly understand and appreciate that, but you are looking at several countries. So you're not just looking at expansion in Jamaica, but you want to partner outside of Jamaica too.
That is definitely so. And we, just about all of the other countries that we have gone into, we have chosen the model to say to the potential investors, partners there, that we definitely would rather to have a partnership. So we're not one of those companies, as you see, will be coming in from the north, who would bring their capital. And of course, it gives them the right to move back out all their profits. We're saying to these countries and people that we're talking to in these countries, be it the governments or individual business people, entrepreneurs, that we're seeking a partnership. What that partnership will look like is when we get to the contract stage or close to having a deal. So we're seeking to have, whatever country we go into, we want to have local persons there, not just the bankers to finance or help in the financing, but we want the business people, we want the staffing there, just like we've done at Wigton, where we try to get as many Jamaicans as possible to be operating and running the plant and limit the outflow of, for us in Jamaica, scarce foreign exchange.
I heard you mention briefly, you really just glossed over it, that you have an interest in farming. Tell me about that.
I mentioned that because it's a conversation we have been having, that when you look to the history of Jamaica, and maybe even at this stage, we're still there, where we import up to 60% of what we consume. I recall a time when colleagues and myself, this is outside of work, were looking at going into goat farming, setting up a herd of, say, 500 goats. And I was advised by others, look how much time they steal goats. And when I said that to somebody, they say to me, look, they steal more cars than they steal goats. Aren't people still buying cars? But farming is definitely on the agenda because the farmers would have done much better if they had access to proper irrigation because, they have to constantly wait on the rainfall. I've been there one year when a farmer complained to me that he would have rather had a hurricane than the long dry spell because he said the hurricane would be just for a day. But the dry spell, he said he was there for 10 years on that land. And it was the first time he had not had one crop in the ground because of the drought. When you hear that sort of cry from the people, it tells you that we as a people, certainly Wigton as part of that, and the government of Jamaica, really, really need to begin to look at how we make this land of wood and water, that the abundant water that we have is more evenly distributed and certainly into the farming areas to provide irrigation so that we can begin to look at feeding ourselves a little bit more and stop sending scarce foreign exchange into other people's country.
But while I accept that, Wigton, so where you're located there in Manchester, you have vast lands and there are farmers on those lands, but it's a completely different industry for Wigton venturing into that industry when your core is energy, and that's what your expertise is.
Could I give you an example and answer that question, Kalilah?
Mm-hmm.
I was working for a company some years ago in another part of my life, and they were the third largest or second largest cement manufacturer. When the marketing for cement was waiting, they were looking at year on year where they couldn't increase their profit because they couldn't get a bigger share of the market. They decided to switch into real estate. And for the very first year, after a 4-year drought, they were making more money from real estate than they were making from their core business of cement. I say that to say we shouldn't be fearful of stepping out. We have a management team supported by our board who is not timid in looking at new ideas. And when we get down to, as I say, it's in the very preliminary discussion stages, if when we begin to look at what is required and we say, well, we couldn't get the proper agronomists, we couldn't find enough trained people, so maybe you need to put that out for a year. But we don't want to throw anything under the bus or put it aside until we have explored it properly. And for the mere reason that we are short of food to feed our people and depending on importation, I'm saying that's an opportunity to be explored. And we're not that we don't have the expertise in-house. We can always buy the expertise.
But coming back to your example, so that cement company you said had fallen on some difficult times, and so they basically had to pivot into another industry. Your industry, which is renewable energy, things are good. Your profits are up 34%. There are opportunities as the government has laid out a plan for, well, not necessarily a plan, but a target of increasing renewable energy to 50% of the total grid. I don't remember by when, but there are massive opportunities in your industry and opportunities for growth as well. So it's not the same type of comparison where you'd be forced into another industry because what you're doing now isn't working anymore.
Kalilah, when you do that analysis, something starts to run across my mind. Before there was a cell phone, I never knew I needed a cell phone. And I don't think the people who were developing it had said that there's a dire need for cell phone, let us develop one. They developed a cell phone and then the market came for it. You know, there's a saying that if you build a better mousetrap, you know, the world will beat a pathway to your door. We don't want to wait until there's a panic or there's a shortage. The government has been speaking about renewable energy for years. If you just look back of how long it took the government to get an integrated resource plan out to the market, it was on the table to be out every year for a period of over 3 years. And even now, as we speak, the one that is out still need a lot of reframing in some sections of it. And I'm saying this without reservation. So we don't want to wait to say that that's going to happen. Since the last call was made for renewable in energy, remember when the last renewable plant went online?
No, I don't know.
Okay. So this is over 3 years ago, 4 years ago, and nothing new no new call has been made. We don't think we have the time on our hands with 31,000 shareholders waiting for their quarterly dividends. We don't have that luxury to sit back and wait and say, because the government said a call will be made. If you speak to folks at JPS now, what's happened to this market? Nobody could have seen COVID coming. We didn't see it. Look at what's happening in the tourist industry. Look at our dependence was so much in one area. Today, the talk is we need to diversify our economy across the Caribbean so we are not so much dependent on tourism, because all it takes is for, quite likely we won't see another pandemic in our lifetime. But look how quickly the bottom fell out of most of the world economy that was dependent on tourism and external forces. So we don't want to wait for that to happen. We want to be proactive, and we want to begin to look at all other options once we do the analysis, and it will be thoroughly done, to say this is an area that we can go into and do it profitably and well.
Okay, so what types of crops might you consider? I know you're not far advanced with it and it's at the idea stage, but there are some food crops that you can use the byproducts of them in energy generation, co-generation from sugarcane, for example. I think corn is another one that you can use for fuel as well and can serve a dual purpose.
You mentioned sugarcane, and I wouldn't want to go down that route at all. There are folks who will tell you that sugar has died for many years, but we just refuse to bury it. I want to tell you that we're looking at that one at all. But certainly for the food crops that have byproducts that could go into fuel generation, that would be on the table. As we speak, the castor oil, it has benefits both in the pharmaceutical industry and certainly could be looked at for biofuels. And we have, access to all the research that has been done by government to say it is viable. It can be grown in a number of parishes in the country, very productively. And we still have not moved ahead with that. For food crops, a lot of people came out to banana because they were dependent on export and the EU market. But locally now we are having a shortage of bananas. Give us an update on Wigton Phase 4. We had gone to the stage of preparing documents, securing financing, and put a bid in for Wigton Phase 4. And that bid, all others, including ourselves, lost out with the exception of the solar plant that's now in Westmoreland, the 8 Rivers solar project. They came in with a phenomenally low rate, which nobody else seemed to have been able to match, and so they won that bid. So we have that engineering still ready. You could say we have a project that's shovel ready, but you know that because we are in a controlled environment, we can't go build a plant because we think we have money and space to build a plant. The call has to be made for the government based on their energy plan to say they are looking for 50 megawatts or 100 megawatts more of renewable energy to be put onto the grid. So until such a call is made, Wigton Phase 4 remains on the books. That should be an example then that even though you have plans for expansion, both locally and regionally, there are no guarantees that such plans would be approved, would be feasible, because you do have competition in that space. You are correct, and it is for that very reason why we say the company must diversify. The old time adage, don't put all your eggs in one basket. As a business, we certainly can't. Mind core business, but with 31,000 shareholders, we better be looking to all aspects that we think can add value to the company. I wouldn't call it a difficulty that I have with the farming idea,
but it changes what the company is at its core. So me as an investor, I think I'm buying into a renewable energy company, and then you go into farming that's unrelated. What do you say to shareholders who might have that concern?
A simple answer, Kalilah. If we are going into farming, you recognize that farming is not just turning the soil, putting in a crop to grow. You'll be using tractors on that farm. Any modern farm now that's going to be of a serious economic value would have to be mechanized. To use any sort of mechanized equipment, it requires fuel. When that same crop is reaped, if it's going to market, you don't want to go into a supermarket. And even if you go downtown to, say, Coronation Market, you'd be more attracted to go to a seller whose products was looking clean and even nicely packaged. Okay, you don't want to have to go home to, worry to put it outside to hose down a pound of yam or 10 pounds of yam. You don't want it to be clean. So you would have to be reaping, you would have to be cleaning, you'd have to be packaging, you'd have to be storing. All of that requires energy. And so renewable energy would be part of what would go into that. You'd have to be pumping water for irrigation. So there is renewable energy again. So we're not going into other businesses that you could say would not have a energy component.
Okay, so there are synergies there.
Yes, definite synergies.
Let's talk about Wigton's profits though. So like I mentioned, the profits are up this year over last year, 34%. What accounts for that?
As was stated in the annual accounts that went out, we were able to contain some of our costs, and the finance cost was also less to us. And there was one other item which slips me right now, but if we go back to the accounts, you could see the details of that. But we did manage to keep the plant at a high % of availability, which is key in the business that we are in. The turbines have to be available when the wind is there, and we were able to do that. And we're able to contain our costs.
We did see a spike in energy consumption during especially the early stages of COVID, when work from home was more encouraged, lockdown stages. So Wigton was able to did you generate more electricity to sell to the grid during that period?
We normally don't look at our business that way, because based on the percentage of renewable that's on the grid, what pertains now is that the public utility will take all of the energy that we produce. So at any given time, we are not subject to what is being consumed. Once the wind is there and the turbines are available, the utility will take all the power that we produce. They will take our power in preference to using fossil fuel because it's a cheaper energy onto the grid for them. It helps their heat rate. And hence they wouldn't run into problems with the OUR if they were to use the higher energy and then come to seek a price increase from you and I. So we didn't have additional turbines to put on. We have a fixed number of turbines. Mm-hmm. When it's there and those turbines are on, the utility will take all the power.
Understood. You mentioned at the AGM that there have been challenges in transitioning to a publicly owned company. So now that you're listed on the stock exchange, you found it challenging, perhaps only initially. I don't know how it is now, but what are those challenges that you experienced?
The challenges are that we have come out of a system where you would be focusing on doing an annual report to your parent company, which would go into a consolidated reports for the Ministry of Finance. And we're now facing that you have to do quarterly reports. You had to look at how your staff to do that. You would have been operating under the government guidelines. When you get into a publicly listed companies, there are other policies that you have to craft and put in place so that you can continue to be listed on the Jamaica Stock Exchange. But they have a very rigid program that you can't go to them and say, I'm going to be 1 month late with my report. That could be a fine or a mark against you to be delisted. So apart from just getting yourself into that frame of mind, there were documentation that had to be put in place which was not necessarily required when you were a government company. And I'm not saying this to say the government doesn't have strict guidelines. If the government guidelines are followed, I think most government companies would still be doing very well. We think we were one of those exceptional companies, even while we were government. We would be on time, but we had some other things that we had to get to. Being part of a subsidiary, we were able to benefit from some of the parent companies' overarching management systems. We had to go find our own legal services because we could no longer go to the parent company, and to go find our own HR person because we're no longer under the umbrella of group HR. We had to go find our own communications person because we're now speaking as a separate entity rather than we'd have one voice with the parent company.
So it's more administrative challenges then.
Yes.
So then it's even more impressive in that context that you're able to increase profits and cut some costs since you had to find these additional things.
We are very cautious of taking on to say impressive in what we do. We just try to do what we do to the best of our abilities. And we see this every day as a learning process as we are getting out there. You also have to recognize that where we were in a government company and we couldn't do anything beyond what the government allow us to do. Now we are out in the space with everybody else, competing for those markets. Previously, we couldn't have gone across the Caribbean looking for projects to expand in. So you now have to have a team of persons. I have to be saying to my management staff, you should always have a suitcase packed and ready to move. And if COVID wasn't there, we'd have been all over the Caribbean, but we got locked out. But we got locked in and locked out. So, and people at the plant, we had to say, we'll get all your vaccinations up to date, because at a moment's notice, we could be calling you to say, you're on the next flight to this country. Here's your term of reference. You got to come back and brief the rest of the staff on this bit of information. So these are some of the challenges that we face, and they would have been maybe a little bit more daunting. But as you recognize, if you're running a race and doing well, I don't think you feel as tired as when you're running the race and not seeing, they keep moving the finish line away from you, or you can't get to the finish line. So in that respect, we say it is daunting, but we didn't expect that it to be any different. We know that we are now getting out there with all of the other players who would have been in the game for longer than us, and we are really playing catch up. When we got to one country, we were told, boy, you're a little late, we have a contract on our desk already, and we just didn't, because they were having a clause in it that we didn't like. And we say, can we still, if you haven't made up your mind, can we still be part of that? And they have allowed us to, put something in and say, let us hear from you, but then came COVID.
That phrase will be echoed for decades to come, I'm sure. But I wish you all the best, Mr. Barrett, and I look forward to hearing what plans Wigton has in the pipeline.
Thank you very much, and we have even greater anticipation than you to see what we can bring to the table when next we speak or when next you hear from us.
Wonderful. Yes. Thank you again.
Thanks very much. Have a good day.
You too. Stay tuned, we've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agent, insurance made easy, and Massey United Insurance. How good is your insurance?
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined, with the combined index losing less than 1%. 101 stocks traded across both the main and junior markets of the JSE for the week ending Friday, October 23, 2020. 43 advanced, 46 declined, and 12 stayed the same. Nearly 133 million shares changed hands on the Jamaican dollar market, totaling nearly $512 million. Wigton Windfarm ordinary shares traded the most, taking up nearly 55% of market volume. The stock gained 8 cents to open the week at 80 cents. Radio Jamaica traded the second highest, with people buying and selling 20 million shares in the company. Radio Jamaica's stock gained 14 cents to open the week at $1.26. Jamaica Broilers Group rounded out the most traded, taking up 6% of market volume. The stock gained 92 cents to open the week at $27.82. Now let's see who had the biggest gains. Palace Amusement jumped nearly 28% to close last week at $1,480, following its first drive-in movie in New Kingston. Consolidated Bakeries rose 18% to close last week at $1.43, and SSL Venture Capital Jamaica rounded out the biggest gains to close the week at 59 cents. On the losing side now, Proven Investments USD fell at nearly 24% to close last week at 21 cents US. Kalilah Group fell nearly 23% to end last week at $1.10 a share. JMMB Group 7% VR Jamaican dollar CR preference shares lost nearly 20%, down to $1.34. Market recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers and Proven Wealth. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by investment research and sovereign risk analyst at JMMB, Leovaughani Dillion. We also have investment analyst at Proven Wealth, Julian Morrison, as well as young investor at the University of the West Indies, David Rose.
Hi guys, good to have you back.
Hi, Kalilah. Great to be back.
So let's see what's new in the world of business, finance, and the economy this week. One thing, Statin's labor force survey came out. So we know that they didn't have an April labor force survey that was canceled because of the pandemic, but they did do a survey in July. And what we're seeing is that the unemployment rate is now back up to 12.6%. So we have basically erased 4 years of job gains in just a few months. Leo, what's your assessment of that?
Yeah, so the impact on the Jamaican economy, unfortunately, is, it's not good. Of course, a lagging indicator, so it's already been happening. You're just seeing that data now. It's something that was expected. So if you look even globally, it's not just Jamaica. Unemployment, for example, going into January 2020 was about 7.3%. You see this spike to 12.6%. For a little perspective, the US unemployment rate was at like 3.6% in January 2020. That at July 2020 was 10.2%, right? So you saw an increase across the board. So it's not just Jamaica, it's across the board globally. It's unfortunate, but we knew it was going to happen. The question is how fast we can get that number back down.
So the US had a steeper decline than we've had.
Yeah, because if you look at January 2020, the difference between our unemployment rates in Jamaica and the US is about 3.7%. You look on July 2020, it's about 2.4%. So relative from that metric alone, you could say, Jamaica did fairly well. It's unfortunate that, of course, once the unemployment rate ticks up, that means, somebody's lost their work, it can mean a lot for them. So that's an unfortunate situation, but we knew it was going to happen because of the pandemic. So it's not unexpected. And to be frank, it could have actually been a lot worse. So even though it's bad, it could have been a lot worse.
I was expecting a lot worse, a 5 percentage point drop. That's 135,000 jobs though, Julian.
Yeah.
Yes. It's something that we all have to keep in mind because it will take quite a while to pick up from here. Just for perspective, in 2013, I think we're about 13.5%. So as I mentioned earlier, it took us a while to get from 13.5% to about 7.5% in 2019. That's about, how long is that, Leo? That's about 5 years. Yeah, that's about 5 years, 5-6 years. It takes a while to move that number. So if we're here now, above 12%, it will take us a while. Numerically, I mean, to try and say, boy, by next year or next 2 years, we're not going to know. We don't know where it's going to be for sure, but we know we're in it for the long haul.
Yeah. So, David, I don't know if you had a chance to see the presentation from Don Anderson to the Business and Consumer Confidence Survey. And he noted that a lot of people have turned to hustling. So do you think, in your opinion, that some of these jobs are actually gone for good?
No, I guess many jobs are gone for good because what has happened is that because of COVID, a lot of inefficient processes have technically become more efficient, if you want to call it that.
So some of the jobs that would have been done by certain persons will no longer be taken on later on. I can't think of any particular specialty or skill that would be going out right now, but some of the jobs are not coming back. So you've seen some restaurants close. Palace is struggling right now. Even Mayberry, in an article in the last week, said that if, based on what they're seeing, especially with the use of, as you say, flexi work, they might potentially lay off about 40% of their employment or their staff. So even though Anderson basically said that, persons are moving towards hustling, the reality is that a lot of skills that were quote unquote viable in the past, meaning pre-COVID, are no longer going to be able to sustainable post-COVID, because as saying, more person moving towards technology, moving towards more efficiency, and it's going to take a while for that, as you say, economic flow to move back through the economy. One thing I have to make this a practical note about is that missing data from April technically kind of in a way mask some of the damage that happened because of COVID. Reason being, remember, Duncox, the law firm, laid off their entire staff except the partners. And you had several other companies, as I said, the pandemic, are just cleaning our house. Most of the tourism sector was unemployed. As Minister Edmund Bartlett said, only about a quarter of the actual tourism labor force around April was actually employed in some capacity. So, and I remember that when September and July came around, more persons being brought back into the offices, the places were being opened back up. So I'm saying that missing gap from April, that missing data, technically kind of masked some of the damage that was there. So even though it might have had a quote-unquote spike to 12% now, it potentially might have been higher during that interim period where the pandemic was at its peak, because at that time, most of the countries were on lockdown, most places were locked up, and so on. So right now, I am saying some jobs are technically gone, not coming back. In tourism, and that's them going to be the skills, service-based sector, because if it's easier for the company to just say, hey, I'm going to outsource an operation to the company, it actually doesn't require me to actually take on a liability of health insurance, pension, and so on. And that's just going to be the way. As I said, more efficiencies are coming out of COVID. So as a result, more jobs are going to end up becoming lost, because right now, schools are still locked. There's no back face-to-face, but transport is going to suffer. And several other industries that rely upon different events are going to continue shedding more jobs.
We saw the results from Knutsford Express. We discussed that last week, how they've taken a hit in that industry. But let's look at a company that has been resilient, and that's Seprod. So their interim results are out, and I see some excitement on the market over Seprod. What are the highlights, Leo?
All right, so if you look on the Q3, ended September 2020, revenue was up about 23% to 10 billion. Profits was up to 1.3 billion in that quarter, about 300%. So it's significant. Of note, though, $762 million was from sale of property. So you're not going to expect that kind of number. So the number was good, no doubt, even if you exclude that. But just understand that it was kind of artificially higher than it would usually have been. So it was a good number. Trading at about 14 times trading earnings. So it's not bad from that perspective. Granted, you have to take that number with a grain of salt because, again, the numbers are a bit higher because of the one-off gain. But the trading activity on Seprod was kind of interesting. So the earnings came out October 21st in the morning, right? If you look on the close price the day before, October 20, it was about $58 a share, right? The next day, as soon as that number came, the stock traded as high as $70 a share. And then it started to kind of drop down. So right now, like for example, today it traded as low as about $57. So then that's actually kind of lower than where it closed before the numbers came out. So it's a big, move to the upside and decent volume, about 100, 200,000 units traded. And then you see it kind of coming back down to these levels. A key point to note, why you might see this is a lot of profit taking, because if you go back a little bit to March 2020, the stock traded as low as $30 and it was in about low 30s for a while. So you can understand for persons that acquired it then, because of the panic sales that existed in March, they would have been up significantly at like the $60 level. They'd have basically doubled if they had bought somewhere around those levels. So you could see so that profit taking might have contributed to coming off a bit despite positive numbers. So that's something to kind of be aware of, is basically what you can have happening, and you see it across the board in terms of some of these companies that come up with good numbers, is that investors that acquired it at the lows in March might be more inclined to take profits in any strong rally you see, despite the quality of the gains. Now, that doesn't mean that that's going to be last long term. And it just shows you that you have to be careful, as in, like, as an investor, buying into the basically the hype. So you see the numbers and you just run ahead and you just buy it wherever you can buy it. You must bear in mind, sometimes you want to just relax a bit, let it come to you, and not necessarily be chasing stocks, even after very good numbers, because you could have somebody that just said it just because they're up significantly, despite the quality of the long-term value of the stock. So you can just, be a little patient. But yeah, so the trading activity was interesting.
David, what did you notice from Seprod? What stood out for you?
Well, it's the fact that Seprod is at $2.8 billion in net profits for the 9 months so far, and they were at $900 million in the prior financial year for the entire 2019, and just the one quarter of September was greater than the overall 6 months, the first 6 months of the year. And on top of that, Seprod actually had a 32% increase in exports. So that's some of their products to Trinidad and so forth. So there's some of the minor indicators as to what I would call the greater catalyst or future expectations for Seprod, because sugar is no longer holding back the company's bottom line. That massive drag that was holding back year after year is no longer there, and the company, as I said, is targeting 25% export targets for growth in the near term. And on top of that, they're building up the logistics campus, and these are some of the overall great qualities that have come out of Seprod in terms of during the pandemic, because right now they've taken a hit from as you said, the tourism and hospitality side, but one person just sitting at home, one person just their income base towards what they can afford, the margarine, the cheaper relative quote unquote products. Seprod is benefiting from, as you say, that shift in consumer spending, which is critical right now, as people are still trying to have their basic needs of food.
I keep remembering what Richard Pendo, he told me on this program just a few months ago. He said they want to make Seprod into the bluest of blue chip companies. And that quote has just stuck with me, because they have been a pretty blue chip company. They've been reliable over the years. Julian, though, let's look at the international markets. You have your eye on Domino's Pizza. Tell me why.
Well, what's interesting about Domino's is that they have healthy operating cash flows. Their operating cash flows are up. Their revenue is up year over year, more than 11%. And their net profit has done even better. It's in the neighborhood of about 20% in terms of the increase. And that's as at their 9 months performance. Now, they saw growth in the peak of the lockdown period in the United States, well, globally, which would be April to June. And they also saw further growth in the quarter after that, meaning that the company was positioned in such a way that it benefited from a change in consumer behavior because of the work from home measures. Many individuals have a greater appetite for convenience, reliability, and the cost affordable alternative to cooking, right? Which would be fast food in many cases. Yes, it might be cheap to go to the supermarket, but going to the supermarket in this environment might be a risk for many places because Domino's is a global business. They make a significant amount of their sales, both from US markets and from global territories. It's actually the largest international pizza company in the world. So essentially, the company is positioned in a way that they have the wind at their tail and not their head. So they have been able to benefit. They've been doing exceptionally well. They've managed to control their costs as well. Many companies have been challenged by supply chain disruptions because of all that is happening, and that hasn't happened as much to Domino's. So it's a business with good fundamentals. They've been managing their debt as well. So I think it's something worth considering.
When you think about it, a lot of companies in the food industry, especially the restaurant industry, had to try to pivot when COVID hit into deliveries. Domino's would have had an advantage in that because pizza, when you think pizza, you think deliveries. Most of them do deliveries. And so how much of an upside were they able to, how much were they able to benefit from having a leg up on the deliveries industry?
Well, I can go by the numbers, and clearly seeing sales growth of 11% in a post-COVID environment, and seeing net profit growth, more importantly, of in excess of 20%, that really tells a story. And most of this performance came from core activities. So it wasn't a case of seeing one-off gains like the sale of assets or FX gains. It's pretty much from sales. And sales not just from local markets, but from international markets. So we're seeing a similar trend develop right around the system for Domino's in its favor. However, the emerging pro-health trend that we're seeing across those same markets could be a challenge in terms of future growth. However, in my view, and this is my personal opinion, I think that the reliability and habit of getting into reliable, known brands that are cost-friendly and tasty to consumers will be able to see further support for more sales for Domino's, because people want to buy from places that they trust and things that they really love and enjoy. Maybe on a Friday, you can have Domino's as your cheat food while you stay healthy from Monday to Friday or Monday to Thursday or whatever the case may be. Some people
just to be clear though, when you buy into Domino's in which exchange does it trade on?
New York Stock Exchange.
Okay, but just to be clear, if investors locally were to buy into Domino's Pizza, they're not buying into the Domino's Pizza here in Jamaica, right? What exactly are they buying into?
They're buying into the parent company, which actually has the license to allow franchisors to operate in different territories like Jamaica. So indirectly, way down the tree, yes, technically they're buying into it, but they're really buying into the company.
Gotcha. And I noticed, I just looked up the stock price. It's trading at $391. And so people can contact Proven Wealth there to facilitate that. And Leo, they can contact you for Seprod or any other thing that people are interested in. And David, they can read your articles in the Observer, your analysis.
So one thing I'm going to close off on is that Domino's locally is actually owned by the Cinco's parent company. So Cinco's parent company actually owned and operated Wendy's and Domino's in Jamaica. Wendy's was sold off to Gara Restaurants Limited, but I believe Cinco still holds the Domino's franchise. We're talking about the Cinco parent company. It was transferred to the parent company before it went to the stock exchange. But as it relates to the whole consumption habits right now, Julian made some good points. So right now, persons are choosing more, as you would say, easier options. And for Domino's, prior to the oil recession, basically, they had basically perfected the art of delivery. Even in Jamaica right now, they're the only piece of company you can say that actually has set up their own website, have a platform, you can check an order. Pizza is still not there in Jamaica as yet, but
I didn't even realize you could do all that for Domino's here. I had
yeah,
no
for sure.
I didn't know.
Already.
So you
cool.
Just order online, track
and as you mentioned, Wendy's, David, I noticed that they recently opened a new branch as well. So they're on a roll even in COVID, because they opened one at Fontana a few months ago, and now they're at the new Super Value Center on Constant Spring Road. So they're on a growth trajectory too. Thanks for joining me, guys.
You're welcome.
Right, take care,
welcome.
All the best.
Yeah.
All right.
Bye.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers and Proven Wealth. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at takingstock-ja.com or KalilahReynolds.com and turn on those post notifications so that you can be the first to see all of my videos We want to help people learn more about money so we can all get this money together. This week on Money Mondays JA, we're looking at dividends. On Money Moves JA, Javette Nixon is back. He's teaching us how to use SEOs, search engine optimization, to rank higher in Google search. And on Light Bill Maths, JPS came all the way to my yard to show me how to read my meter. Follow me on Instagram and Twitter at Kalilah Ray, and follow at Taking Stock JA on Instagram. If you want to connect with the analyst this week, check the description box below for their contact information. And of course, check out our brand new websites, KalilahReynolds.com and TakingStock-JA.com. It's the hub for all things Kalilah Reynolds, merch, bookings, money news, and of course, videos. Now tell a friend about Taking Stock, because investing is the new sexy. So let's make it cool to talk about money. I'm Kalilah Reynolds. Stay safe.